Now, let's get to the China angle of this story, because this goes to the demand side, because we have seen a slowdown in demand in China, in part, well, a lot of reasons. Number one, pretty fast-paced, cheap EV adoption, slowing economic growth, demographic changes, more people traveling by train, a lot of things. Let's talk more about this now. Joining us, Derek Scissors, Senior Fellow at the American Enterprise Institute. Derek, thanks for being patient on that. Where does China demand stand right now?
It's hard to imagine a big spike in China demand. The economy right now is quite weak. We're going to get GDP Friday morning in Beijing, and they're probably going to say, 4.9% GDP growth or something like that, near 5. But it's not credible because Chinese money supply, including the monetary figure that's most closely linked to GDP, they already announced it declined 7% in the first 3 quarters. You just can't have narrow money, which is what decline that much, and then say GDP, which is a transaction measure, rises 5%. So they're going to exaggerate the strength of the economy. It's weak. We know that from sentiment. We know that from their own monetary figures. And we also know it from stimulus. And the stimulus case, I think the oil market has responded properly to Chinese stimulus. First of all, it's vague. But second, it looks to be mostly transfers to local governments. Local governments have a debt problem. The central government takes over the debt problem. Fine. But that's not really stimulus. That's putting an underside into local government debt risk. They might spend more money, but they might spend more money on EVs, as you mentioned, or solar or other projects. So there could be a little bit of an upside in Chinese stimulus, but that weighs against the long-term trends that you mentioned and the current weakness of the economy. I think the oil market is reading China right, that there's not much to be optimistic about there.
But what about the rest of the world? I understand China is a massive consumer of petroleum and refined products, but India now has more people than China does. This massive growth in non-industrialized nations that are becoming industrialized. And to my earlier point at the top, Derek, OPEC and the IEA they have different numbers, but they both still see growth, just slightly slower growth.
Right. I think both, if you looked at India or Indonesia, which is, getting up near 300 million people itself, for the future, those are both bullish for oil. I think the case against is that, can they replace China? Maybe not, as we lose Chinese demand. India is absolutely going to demand more oil. It is a huge population. They're going to have an increase in transport using oil, both by car and by rail. They're not getting there very quickly, though. So if you want to be sort of long-term semi-bullish on oil, India is a good story. I think Indonesia is a good story. But it's not going to push the market up in the fourth quarter or the beginning of next year.
Yeah, and we look at, again, oil is one of the reasons I really like talking about this market, covering it, is that it's supply-demand. There's geopolitics, but it is one of the few truly global markets out there. You heard our earlier conversation, Derek, about just pure math. Supply-demand, take the geopolitics out of it. Could you also make a case, I mean, you're not an oil specialist, analyst by nature necessarily, for $50 oil? When you look at supply-demand, which I'm sure you do, it's pretty much covered on the supply side.
Yeah, I mean, that's a decision by the major producers, of which the United States is one. I don't think anyone thinks the world economy is going to pull the price of oil up, that we're heading into a boom year in 2025. And so it's not going to be on the demand side. So if the major producers, Saudi Arabia, of course, but also the United States and several other countries, you mentioned what was going on in Latin America, I mean, if they want to produce more oil, then $50 is in reach. And so because demand is going to have fairly limited upside, it's a question of whether the suppliers like higher prices or higher volume.
Yeah, and that's the whole market share versus higher price battle, that the battle of words right now. We'll see if it turns into a battle of actions. Hopefully OPEC they're supposed to meet in person on October 1st. We'll see. They've moved some in-person meetings. I think the world's energy journalists are hoping that meeting still certainly happens in person. Just quickly, macro China. Derek, where's this going? Demographic cliff. Xi Jinping, probably president for life, almost self-named, and you know what I'm talking about with the Communist Party. Where does China end up? I mean, will the stimulus work? Is this going to reinvigorate an economy that's really just tied to real estate?
The stimulus is not going to work for more than a couple quarters. I mean, there's all this stuff about if we spend enough money, magic will happen. It doesn't work that way. You can get better quarters. You can have a better fourth quarter than a third quarter, or a better first quarter of next year. So if you're looking about can stimulus improve the economy for a couple quarters, then it could. We haven't seen what the stimulus is yet, so we don't know that. But that's on the table if the Chinese want it. In the longer term, it's what you said. Demographic is going to kill them. They're still limited by a lot of debt, which may discourage them from an intense stimulus program. They ran up a lot of debt with their stimulus program in 2009. So the trend in the short term is hard to see because it's a policy choice. But in the medium and long term, the trend is down. If you're expecting more from China macroeconomically, you're not going to get it. In demands linked to aging, they'll have a lot of that demand. They'll have a lot of demand in cleaning up the environment. But you're not going to get macroeconomic boosts from China beyond the next couple quarters because they're heavily indebted. Xi Jinping doesn't like the private sector, and they're a rapidly aging country.
Well, harder to control the private sector. Derek Scissors, AEI. Derek, thank you.